Macro Eagle, a channel that focuses on macroeconomics and current trends. If you like the content, please like and subscribe. It really helps the channel. Bitcoin has recently hit a recent high, now passing over 100,000 US dollars a coin, which now is approaching all-time high that was set in December 2024. The cryptocurrency has been on a tear in April and leading into May, as news from New Hampshire state in the United States officially has become the first state to adopt the crypto reserve strategy. This is welcoming news for the original crypto and comes at a time when gold, the original sound money, is hitting all-time highs as well. For years, so-called Bitcoin maximalists reiterated that Bitcoin is digital gold and has better qualities and convenience than the yellow metal. However, market analysts often shun Bitcoin by essentially looking at it as a risk-on trade, which has a high relationship between the tech-heavy Nasdaq ETF. In other words, Nasdaq goes up, Bitcoin goes up, and vice versa. What will be very interesting going forward is when Bitcoin disconnects itself from this observation in markets and forges its own path based on limited supply and demand, inflation, increase in the money supply, and geopolitics. The well-documented conflict in the Kashmir region bordering India, Pakistan and China have escalated again, with India using precision missiles to strike targets in the Pakistan-administered section of Kashmir under Operation Sindoor. This comes as a week earlier India accused Pakistan of funding via terrorist groups the killing of 31 Indian tourists in the Indian section of Kashmir town of Pahalgam. The conflict, particularly in Kashmir, started when both nations gained their independence from the British. The Maharaja wanted Kashmir to be an autonomous region. However, the citizens decided to join India under the proviso that if tribesmen attacked the region, India would help. Soon after, wars erupted and the United Nations intervened by partitioning the lands. What makes this especially dangerous is that these two countries are nuclear bomb-powered states, both having over 200 weapons. This is why world powers, both in the West and East, are trying to defuse the situation as fast as possible and return to the negotiation table with the multi-decade-long conflict. What most people don't know is this truly is a geostrategic minefield with the following attributes. India buys 60% of their military equipment from Russia. Russia sells significant quantities of oil to India. Kashmir is 60% Muslim majority, which could introduce other players in the Middle East to their aid. China supplies Pakistan with arms, as China has had diplomatic issues with India. The only superpower left is the US, which Vice President Vance has already expressed that the US would not get involved in conflict. However, be indirectly affected by the escalation in financial markets, and oil prices could soar at a time when the government is enacting tariffs, bringing further volatility. So as you can see, not only Israel-Palestine, Russia and Ukraine conflicts are continuing. Another level of uncertainty has been added, with India and Pakistan playing out their frustrations on the world stage. As the final plans for individual country or trading bloc trade deals come to pass in the near future, the effects are already starting to play out. Key products the US exports, namely soybeans, corn, and beef, are being hardest hit at the moment. Houston, Texas is the biggest port in the country, and the TEU, 20-foot equivalent unit, a term used to gauge the cargo capacity, is down 3% from last year. Small business in particular is doing it tough, with a sluggish economy, uncertainty to when it comes to securing new product, especially in the e-commerce space, and higher taxes. S&P 500 companies are also scrambling to re-engineer their supply chain contacts and sourcing, either in other low-cost countries or, if possible, making it more products at home or in the region. The UK recently has signed a trade deal with reports that the UK compromised more than the US, with reducing 25% tariffs on imported American autos into the UK and better access to agricultural product imports. The US still has maintained a 10% tariff on UK goods. It remains to be seen what the deal with the EU, China, Canada, and other economies will do to renegotiate the current reciprocal tariffs. On to a country that has no issues with the lack of economic growth. Argentina is expected to grow by 5.7% in 2025, off the back of falling inflation and substantial economic reforms that are aimed at reducing government intervention within the economy. This will make it the second fastest growing economy in the world, after India. Also, the IMF has recently approved a US $42 billion loan aimed at stimulating growth and removing the fixed exchange rate with the peso. The loan will be staged based on the country's continuing economic progress. Argentina does have, in the past, a not so amicable relationship with the IMF, having defaulted many times in its recent history. However, the skepticism can be quickly dismissed, as no leader in Argentina has made so much change in such little time as Javier has in the history of the country. Well, that's it, people, for this episode. Many thanks for watching. If you enjoy the content and like my work, please like and subscribe. It helps the channel out. Also, if you want to check out my ebook on Amazon, links are provided below. Once again, thanks, and Eagle out.